Hello, this is Price Headley of BigTrends.com with your special weekly market update for this Monday, February 4th, 2019. We're right near the end of this close here, and it's interesting because the markets have been pretty resilient despite climbing up to some short-term last 6-week highs after the Christmas Eve spike low. Here we are retracing back just under the long-term 200-day moving average, and we're tracing up above the acceleration bands in purple, which is an indicator I developed at BigTrends, but we're right up into the 20-day Bollinger Bands. And what's interesting to me is that, as we kind of come back into a lot of this long-term resistance here, we've got the overhead area that we tried both right after the midterm elections and again started December. That just lots of highs nearby. But what really catches my eye is look at the volatility index. The CBOE volatility index, or VIX, is really interesting here because essentially it looks at the generalized uptrend in volatility we've seen since the beginning of October. And you can see that we had a couple of tests right back down to that 200-day average, but also right down to that lower red Bollinger Band. And so when we tag that lower red Bollinger Band, it's usually a time where you can see some very quick snapbacks up in volatility. I think conservatively, look at that gray line, that's a 20-day average, as a first target, but then aggressively look at the possibility of popping up to the upper Bollinger Band in light blue. And you can see right now we've just touched it. The last two sessions, we're a hair under the 200-bar average, which will be interesting to see if we stay under there or pop right back above. But now this is the second day in a row that we've touched that lower 20-day Bollinger Band. That's with two deviations out there, which means essentially 95% of the time price action should stay between these bands. So essentially you're buying low and potentially can trade some VIX calls back up. 20-day average right now is 1864 and coming down a little bit. I actually did what we call a debit spread, which is where we buy an in-the-money call, sell an out-of-the-money call to kind of benefit from this projected pop over the next week or so. And go back and look at how many times that happens where you tag that lower band. You see sometimes it's kind of slow and it just runs back to the 20-day average over the next several sessions. You see other times, of course, it's extremely fast, and that 2-day spike there in early December where we got the big market sell down. Remember, VIX tends to spike up when we're getting a rise in fear, which is usually tied to a market pullback. And so you can just go back and see, yes, sometimes you got to have patience for a couple of days, and then bam, you see the quick shot up potentially, again, in 5 days back to the upper Bollinger Band. If that best case scenario happens, right now, that upper Bollinger Band is 21.5, but it's coming down, and I would think that between 20 and 21 would be a pretty good upside target. If we get a pop from here under 16 to 20 to 21 in the VIX over the next week, you can bet that SPY is going to take it on the chin with a quick pop down. Why not just buy some SPY puts? Because my belief is that, and play the downside, my belief is it's a little too strong of a trend here. Whereas I think that volatility trend is the more reliable trend to snap back, in essence, to not really have a trend in VIX, but it's much more of a classic trading range situation. And you can go back over just countless times where you look back. Remember when we saw that massive run up in VIX there in early February last year, almost a year ago today, we were seeing the plunge there. It was actually February 5th in 2018 where the VIX actually doubled in a day. So that might also imply some potential for some seasonal strength in VIX, some seasonal weakness in stocks, because February is not a great month for stocks historically. So it's going to be really interesting to see. But just go back and look at how many times you tag that lower Bollinger Band. That's the red line here. And then within a matter of 5 days, you spiked sometimes dramatically up. So prepare for that. Take advantage of it. If you have questions about it, give us a call at 800-BIG-TRENDS or drop us an email over to clientcare@bigtrends.com. We can tell you more about how we're taking advantage of a coming spike in volatility. Keep trading well. See you next week.